Welcome everybody to our webinar regarding Fishbowl and Netstock. We're excited to announce this new add-on to improve Fishbowl functionality and ordering functionality. Today we're going to be presenting. Your hosts for today are Jean Tarazevitz and Russ Graff. We've both been in the ERP world for quite a long time. I don't really want to admit how long. And we're excited to show you this new add-on for Fishbowl. So I would like to turn this over to Russ.
Thanks, Jean. I appreciate it. And thanks and welcome to all of our attendees as well. As Jean mentioned, our topic today is inventory optimization for Fishbowl. We do have a full agenda today. We've got some things we want to cover in our 45 minutes or so that we've allotted. Just talk a little bit about some background and how businesses today are managing inventory and what role Excel often plays in that environment. Just kind of make sure we understand some definitions in terms of what we mean by inventory optimization. And then we'll talk about how Fishbowl does some things to really help in this area, but then how does Netstock and Fishbowl together really help you optimize the inventory. And hopefully at the end, we'll have some time for some Q&A as well. We are recording this session, so we'll have the ability to send you the recording after the fact if you want to share with colleagues or give it a fresh listen yourself. So we'll try to help you that way. So plenty to cover, so let's go ahead and get started. So at Netstock, we work with small and medium-sized businesses all across North America and for that matter around the globe. And so these are typically inventory-based businesses, right? So they're distributors, manufacturers, retailers, more often than not nowadays, e-tailers as well. Many distribution manufacturing companies are certainly adding e-commerce function and multi-channel or omni-channel type of approaches to doing business. And so for the most part, these businesses, the value of their inventory is really the largest asset on their balance sheet, right? It's absolutely core to their business. And so the question then is, well, how do the majority of these businesses manage this critical asset, this inventory asset that they have? And certainly to some degree or to great degree in many cases, they're making strong use and leveraging their ERP software or accounting software, depending on the size of the company, what sort of applications they've deployed. Also not uncommon to see third-party add-on applications that are geared towards and integrate with those accounting and ERP applications. But also often, again, spreadsheets and Excel being the dominant one, of course, also play a critical role. And these can be some pretty complex processes and complex efforts. And we've seen some challenges in that Excel spreadsheet environment because really the product's just not specifically designed for the purpose of inventory management and replenishment. So we'll talk about why that's so prevalent. But before we do that, maybe just a little bit of quick context here, and that there is a difference between what we call inventory control and inventory replenishment. These are really both two sides of the same inventory management coin, if you will. But often when we think of or hear the phrase inventory management, usually our minds go to what really we would call inventory control. It's the physical management of the inventory asset. Things like shipping, receiving, doing physical counts, maybe cycle counting, maybe bin management within the warehouse. A lot of times entailing use of barcodes and scanners, handheld devices, and maybe deploying some sort of a third-party application to help manage that feature, that function within the organization. So, certainly this component of inventory management, this control function is critical. It does a great job of telling us what product is where and at what quantities, and absolutely that's important, but it's not the whole story. And so it doesn't really tell us if it's the right quantity of product at the right place at the right time. And that's really the flip side of the coin that we would call inventory replenishment. Sometimes you might hear it referred to, as we already have, as inventory optimization. Demand planning is another phrase that's often used to describe this sort of function. So this is really the part of the equation that companies are oftentimes using Excel spreadsheets or other external tools to try to manage and complement what they're already doing on the physical control side of the fence. So what about those applications that are in use, right? Certainly, it turns out that most of those accounting packages, especially those geared towards the small, medium-sized business market, simply don't do a great job of tracking and managing the replenishment and demand planning side. They're usually missing some functionality, or what's there is kind of hard to use or understand, so therefore it tends to be underutilized. So in the case of QuickBooks Enterprise and Fishbowl, what we see is that the core inventory functionality in QuickBooks is fairly limited, right? It has a certain level of functionality geared towards its market, and for many businesses, that's more than adequate. That's fine, but for a lot of companies, they find limitations there, and so the addition of Fishbowl as a great third-party add-on really adds some critical functionality, right? Provides some really key improvements in the core inventory management. Does a great job there. Also adds, in addition to that, adds some limited functionality in the areas of replenishment. It handles min and max and reorder points, etc. But it still lacks the full replenishment features that many businesses do require. One of the gaps, and I'm not an expert in Fishbowl by any means. I've been getting some teaching from Gene and others in the Fishbowl space, but I understand that one of the challenges is kind of a lack of what we might call time phasing or time scheduling of orders, both on the sales order side and the purchase order side. So being able to look out at a time horizon and see what needs to be ordered when to meet different demand horizons at different timelines across the horizon. So that's one area, and we'll talk about some other issues that we think that the Netstock application really fills some nice gaps. And that's really the area where folks are also then trying to figure out how to use Excel spreadsheets to fill some of those gaps, right? Let me extract some data from Fishbowl and from QuickBooks or wherever and bring that together in a spreadsheet now to help me try to do some planning. And if you've been a Fishbowl user for a while, you've probably had Jean or someone like her help you do some other external reporting to try to guide some of your purchase decisions and timing of those decisions and so forth. So probably, I would expect you're probably listening and nodding your head and understanding, yeah, that that's something that makes sense to you. So let's talk a little bit more about Excel and the spreadsheet environment then in that case. And why is it so prevalent? Well, certainly primarily because it's available, right? It's typically on everybody's desktop. It's part of the Office solution, so we've already got some familiarity with it. It looks and acts and behaves and navigates much like the Word and email applications and so forth. Microsoft's done a great job of making that all very familiar. And the fact is that Excel can really do some pretty amazing things, right? It's really an awesome application. We've all seen Excel wizards probably in our organizations create some really amazing worksheets and do some pretty fancy stuff with it. So it feels like that probably makes sense. And heck, it doesn't cost anything, right? It's free, so why not try to make use of that tool? I guess the question we would ask is it really cost free? Right? You may not pay much out of pocket to license it. It's available on your desktop, but we believe that there are some hidden costs that are very real and could be really substantial in trying to leverage Excel as a tool for managing inventory replenishment. Because really, again, you think about it, Excel is really sort of a development tool or a platform. You get this blank form and you kind of can make it do what you want. So you feel like, hey, I've got a unique situation, right? Everybody feels like their business is unusual and unique and nobody else is like it. And so I'm going to use this kind of generic tool or platform to build out what I need to accomplish the way I do business. And so again, we would argue that there's really a best practices way to manage this side of the business, and that trying to develop or build an application using a tool like Excel is really not that well suited for what could be done in a better way. And that's really part of what we want to talk about here today. And we also know recent studies and many studies over the years have shown the level of errors that typically exist in business spreadsheets, anywhere from 70, 80, 90% in many different studies that we see talk about the level of errors. And one of the challenges with that is that sometimes they're not always evident, right? You might have a bad formula that doesn't create an error message. Obviously, if we get a one of those classic circular references or those kinds of Excel errors, then we know something's wrong and we can go try to audit that and track it down and make those changes. But many times these errors go undetected. I can have a bad formula or pulling data from a wrong cell to a subsequent cascading worksheet in my spreadsheet, and not even realize that as that cascades down, what started with bad data now has really made my errors that much more difficult and extreme, right? It really extrapolates the problem. So, so we know that it tends to be error prone as well. So I guess it might be important to step back a little bit here at this point and just kind of understand what the impact is on your firms when inventory is not optimized, right? What's the problem that we're really trying to solve when we say that you need to optimize your inventory? And so non-optimized inventory tends to result in a couple of different conditions that are costly to the organization. The first is the concept of excess. When we work with our customers, and oftentimes coming out of a spreadsheet environment trying to solve this problem, it's not at all uncommon for us to identify 15, 20% or more in excess stock on the books in the warehouse. And so if a firm has, for let's say for easy math, $1 million worth of inventory, that can mean that some $200,000 is tied up in working capital in excess stock sitting there gathering dust in the warehouse, when that could be used elsewhere in the business to drive profits, right? That money could be put to much better use. And in addition to that, the excess inventory actually has some hard carrying costs associated with it. Depending on which expert you read, it might be 20, 25% of that value of that inventory is available or costing you in hard carrying costs, things like taxes and insurance, having shrinkage and obsolescence of that inventory as it ages. You've got to count it, move it around, so there's labor costs associated with it. So there are some very hard costs associated. But the challenge is that even worse than having too much is running out of stock, right? The second condition on this slide. And so what many businesses do to solve the second problem of preventing stockouts is they just buy too much. And so both of these have some costs. In the case of running out of inventory, you've got customer satisfaction issues and potentially a loss of a sale, right? If you can't fulfill demand from one of your customers, if it's an item that can be found elsewhere, your customer may go somewhere else to make that purchase, so you lose that sale and the related profit to that sale. But not only that, if it happens often enough, or if your customer has a excellent experience with a competitor, you run the risk of losing that customer altogether. So very expensive, even a worst case scenario than having too much, but neither of these are ideal. And of course, the third issue is that the buyers and planners in the organization are the ones that have to manage these two seemingly competing interests in the organization, right? So they tend to be running around using all sorts of manual processes, putting out fires, expediting orders, going into the warehouse all the time and checking stock, and all these different activities that are not very efficient, not very productive. And so it tends to tie up an awful lot of time. Many times we find these folks are spending half of their time or more just manipulating numbers, right? Trying to get it right, dumping data, playing with the Excel spreadsheet just to get to the point of making a decision and now making a purchase. As opposed to if that work could be done for them, they can focus their time and energies on much higher value activities, working with suppliers, negotiating prices, streamlining the supply chain, improving freight charges and shipping costs, and just looking at all the different ways that you could improve the supply chain flow, increasing turns of the inventory and so forth. So much better things that those folks should be doing with their time than messing with numbers and putting out fires all day. So a lot of impact to the organization, a lot of profit lost if we're not doing a good job of optimizing our inventory and managing that replenishment process. So let's think a little bit more about now that Excel approach, right? So if we're going to use a spreadsheet or Excel to help us with this process, there's some real key issues here that we just want to make sure that we're covering. And usually, about this over a conference table or at lunch or whatever, get a lot of head nod and recognition that, yeah, this has been a real challenge for them. Because really it's all about accurate inventory, stock balances, accurate data is critical. And so we can count on our ERP, our QuickBooks, and our Fishbowl environments to give us pretty good understanding of what's real, what's happening out on the shop floor, and getting good data. But now getting that data out becomes a challenge. It's often stored in multiple files, 7 or 8, 10 different files maybe in the database. And so I've got to go grab things like inventory master files, maybe bills of material files if I'm doing some kitting and assembly work. the order files, both on the sales and purchasing side, history files from both those environments. So there's a lot of data to grab. And so you've got to make sure that you can identify all those, get that into your Excel spreadsheet and have it come in cleanly and so forth. Not easy, but doable. Some of you probably are doing that today, and it can be a little bit time consuming and a little bit painful, but you get that job done. That can get done. But but there are other issues. What about the control issue, right? Who in the organization has that task, and who has control of that data extraction process? Who has control of the inventory spreadsheet? Who has control and final decision making on the formulas and how that spreadsheet flows? And then what happens when that individual either is out sick or on vacation, or even worse, leaves the company? Just a few weeks ago, I was on the phone with a prospect in Wisconsin, and they were telling me about this really smart college kid that they hired. Came in, did a great job of understanding their business, really understood statistics and regression analysis, really was a wizard in Excel, created this monster spreadsheet. That was their word, monster spreadsheet for placing orders. And of course, now when we're talking to him, that whiz kid's no longer around. He left, graduated from college, went out and got a new career. And now nobody left in the organization really has a clue what's going on internally in that very complex spreadsheet, and it just can't be used. So now they were at a loss. So a control issue is a big one. Data synchronization is another one, just the timing of when I grab the data. Right, if I'm exporting data from Fishbowl out into a spreadsheet and I want to grab the purchase order files, maybe that takes a few minutes for that to happen. I get a phone call, I get interrupted, then 10, 15, 20 minutes later, I'm bringing in the inventory master files, and then 10 minutes later, I bring in the sales order files. So those things are automatically out of sync, right? We've got to be able to grab all that data at exactly the same time if we really want to have that data, again, be accurate. And again, we know if there's some idiosyncrasies there and accuracies there, those can create some cascading problems downstream in our spreadsheets. Then there are, other challenges, right? Additional inputs, things like vendor lead times and how do I product classify, right? My A items versus my B and C items. How do I calculate a proper safety or buffer stock? How do I accommodate the different replenishment cycles or times that I want to make purchases for different items, maybe by item or by product line? And then, the fact is it's an ever-changing environment. Even if I got all that nailed down and I got pretty good at it, we know that the business and its needs and your spreadsheet are all going to evolve. The data files get bigger. There's more transactions to manage. It takes more time to extract the data. So we have more of those timing issues. Maybe we got user changes. Maybe we got process changes in the business. A new manager comes into the warehouse and wants to do things a little bit differently in terms of timing of receipt of goods or whatever it might be. There can be special rules. So there's an awful lot of things that can be changing in that environment. So it's not static that once you get it right, it stays that way. In fact, it's just the opposite. And then other complications I alluded to already, things like bills of materials. So how do we manage those recipes and component demand when I've got a finished good that's made up of multiple components? Or if I have an environment where I've got a sort of a hub and spoke warehouse, all right, I've got a central warehouse distribution type center that does all my buying, but then it supplies and replenishes secondary warehouses or stores that might be defined as a warehouse location in Fishbowl. So how do I manage those different demand streams and so forth? So there's just an awful lot. My point here is that to try to do all this in a spreadsheet environment is pretty challenging to manage all those complications. And I think that's pretty clear. And so keep in mind that, whether you're using a spreadsheet, QuickBooks, Fishbowl, some combination, all the above, the whole point of all this exercise is to create what we would call an optimal order, right? To make an optimal order recommendation for your buyers so that they know what to buy when. And so if we really define what we mean by inventory optimization, and so an optimal order is one that promotes inventory optimization, and what that's really defined as having the lowest possible inventory value with still the highest possible service to your customers. So again, it's managing that balancing act to know exactly how much and when I need to buy based on all these different factors so that I have enough but not too much. So I think we get it, right? And really one of the big challenges in this whole piece is that safety stock calculation that I mentioned. For us to be able to get to those optimal orders and optimal balances of our inventory, we really need to have a good understanding of safety stock and how we're calculating that. How do we come up with that buffer to manage the various risks in the organization, right? We have a risk of demand spiking or plummeting. We can kind of project what we think we're going to have in terms of a sales demand, but what if that changes? And how does that stocking, that safety stock or buffer, manage that risk? What about our supplier performance, right? If we have suppliers or vendors that are not meeting their lead time, even if they're early or if they're late or if they short ship us, how are we managing that risk factor as part of our calculation of a proper buffer stock? So there are some best practices there that we can take into account that, again, are just really difficult to do in an environment that's not fully focused on this purpose. And so that's really the issue, right? Clearly, managing this is full of problems and challenges, and Fishbowl can certainly help. It takes us a good part of the way there, but it still lacks a couple of critical features that we have found that many small, medium-sized businesses really need. And the reality is that just because you're small or a medium-sized business doesn't mean you don't have the complexity that many larger organizations have always had. Supply chains today in a small and shrinking world really can be pretty complex and challenging. And so question then is, what's the solution, right? How do we solve this? If we've all kind of been shaking our heads and nodding and recognizing, yeah, that sounds like me, and in my company, these are the challenges, you're exactly right on point. So how do we solve it? And the solution is to have really a true demand planning, inventory optimization application that is a dedicated single purpose piece of software that just understands and resolves all these complexities that we've talked about. And ideally, then it would also easily integrate with your ERP or accounting system, in our case, QuickBooks and Fishbowl, right? So now we have the ability, if we can do that, to reduce those manual, time-consuming, error-prone processes and really get through solving the inventory optimization issue, reducing as much as possible that excess inventory, right? If you can, again, glean down 10, 15, 20% of that of that inventory in the warehouse, huge value to that. If I can minimize those stockouts and increase my customer satisfaction, my customer retention, increase my sales, huge value to that. If I can help my buyers and planners make smarter decisions quickly, so that I don't spend half my time messing with numbers, but can just get right to the nut of it. So you see, here's what I need to order, get that order placed and move on. There's just some huge return on investment for those kinds of best practices within the organization. And so that's really what the Netstock approach is all about. Netstock is a cloud-based application. So it's browser-based, so it's available on demand, any browser, any device, anytime, anywhere. So a true cloud application, seamlessly integrated to Fishbowl. So we're going to grab the data out of the back-end tables and database within Fishbowl, typically on a nightly basis, and upload that to our cloud environment and present that a dashboard to you, which we'll be looking at here in a second. I'll do a quick product demo here shortly. And so, so we have seamless integration. We grab the data all at the same time, so it's properly synchronized. We know it's accurate. It's tested, tried and true. We present all that raw data coming from all those disparate places and put it into a dashboard that now it is actionable information, right? It's actually usable by me as the user. I can get great visibility into what we sometimes refer to as the health of our inventory, or give you a health check. So that visibility is awesome. It's all at your fingertips. It's graphical, it's colorful, interactive, so lots of visual cues, easy to navigate. And it really presents what we're really trying to do at the Netstock model is answer two key questions. And one is, what needs my attention? And then as a result of that, what do I need to order? So it's really that what needs my attention is kind of a management by exception sort of approach. I might have 1,000 SKUs in my inventory, and maybe 80% of them, or 800, if we follow the 80-20 rule, are in pretty decent shape. They're between my mins and maxes, and they project to stay there for the near term. So life is pretty good. I don't need to spend any time, burn any calories worrying about those items. But it's the other 20%, the other couple hundred in my example, that are causing me some serious heartburn. They may be already out of stock or about to run out of stock based on our projections. I may have too much of that inventory, or about to have too much when the next PO arrives at the dock that I didn't need yet. Again, I may have forecasts that are not performing. I may have suppliers that are not performing as expected. So I've got all these things that can be going wrong in my inventory environment. And so we want to use a tool that gives us, that alerts us to those areas that need my attention, kind of this management by exception approach. And it just really involves all kinds of years of best practices experience, and we can deploy it very quickly, and it's a very affordable subscription model type pricing. And so I talked a little bit about all of that experience. So maybe this would be a good time to just let you in a little bit about who Netstock is. So Netstock's the name of the company and the application both. That's my employer. And so Netstock started in 2010, so a little over 6.5 years ago now. The founders of Netstock actually come from those very large, complex supply chain environments, worked with some big multinational companies, custom developed all kinds of very complex supply chain and replenishment tools, and big 6 or 7 figure projects that took a year or more to deploy, and very complicated. So they bring an incredible amount of experience, and they've actually worked together. The core founders and some of the core management team have actually worked together in some prior businesses. So this is not their first time together. They've been in this space for 20, 25 years or more in some cases. And so when they came together to build the Netstock application, one of the big things that was different then was they saw an opportunity to take all that expertise that they had developed over the years and build something for the small, medium-sized business market. And now leverage the internet as a delivery mechanism to get that application out there and make it easy to use and affordable and easy to deploy. So we don't have to go on site and do all kinds of consulting and hand-holding. We could really build a model leveraging the internet as a delivery vehicle. Excuse me. So we did that, built the company starting in 2010, and we now have well over 1,000 firms. I think this month we'll hit 1,100. We're adding about 30, 35, sometimes 40 a month across the globe. We're in multiple countries: South Africa, Germany, the UK, Australia, as well as North America. Our customers are in 20 plus countries all over, over 12,000 users amongst those 1,000 plus firms, and managing a lot of inventory, over $12 billion worth of inventory now that's running through the application. So those are great numbers, but I think the core takeaway for you is that we've just got a huge amount of experience. We're dealing with all those customers on a regular basis. There's not much that you can present to us, if anything, from a supply chain replenishment perspective that we have not dealt with and solved for other companies. So with that, let me go ahead and flip over to my actual dashboard here and show you a little bit about Netstock. We've got probably 5 or 10 minutes here to walk you through a couple of things, and then we'll come back and wrap it up and do a little bit of a Q&A at that time. So at this point, you should be seeing my dashboard. So as I log in as a user into the Netstock application, this is what I'm presented with. It's got basically 9 different panels or KPIs, key performance indicators, or some folks refer to these as widgets in a dashboard. So 9 different panels here that I have ability to take a look and, again, get that quick sense of the health of my inventory. The bottom 3 I won't spend a lot of time on. There's really kind of more esoteric, some data purity, some nice tools and helps, but most of the action is day-to-day in these top 2 rows, top 6 panels. Before I spend too much time on them, just a quick overview of the kind of the usability. Again, knowing our target market and that we want to keep the price point down. We can't be on site and doing a lot of consulting and hand-holding. So what we've done is tried to provide as much self-service as possible in the application. So you can take product tours that walk you through different screens and really explain to you what the purpose of each one of those are. We have help screens built in that are kind of wiki-based, so they're hyperlinked, and I can quickly jump and dig into various topics and really spend a lot of time, if I want to, understanding at a deeper level what's going on in terms of calculations, et cetera. You'll notice lots of visual cues and color coding built in, what we call our hover over capability. That as I hover over something, another information bubble pops up for me. The ability to drill down and drill into inventory items and get more detail. I also have some embedded videos. So if I'm not sure what to do about my excess stock or how to handle my potential stockouts, I click on that button, I can get a 3, 4, 5 minute video tutorial. It kind of walks me through how to take action on these problem areas. So lots of ability to really be self-sufficient and self-service, but we're always there to help you as well. Let me click on my chat box, and we've got the ability to take a look at who's already online helping me to solve problems. I can post questions there. So we're always going to be manning that online chat line. And again, because we're a global company, that's typically somebody there 24/7. And these are going to be not just, everyday folks. These are not typical tech folks. These are really expert inventory gurus that really know our application inside and out and know this industry and know this space. So you're going to get some good help there as well. And of course, we do have a full featured onboarding process with great coaching and great training videos and emails and coaching sessions to support that. So we're going to do a great job of getting you onboarded as well. So the online chats are really just there for quick refreshers. So let's take a closer look at the data. So we're going to look at a couple of key panels. First, what's my current stock holding and what's my current fill rate? So how am I performing today against my targets? So I can see visually very quickly that based on this time period, these last 12 periods, which in this case is months, could be days or weeks if I wanted to, how have I been trending? So I can see the trend is going the right way. When I started using this application 12 months ago, I was at 73 million in inventory. I'm down to 55 million. But my model says I could be doing much better. I could actually survive in a perfect world if everything was ideal, which it will never get to, right? But the nirvana is 17 million in inventory. Wouldn't that be nice? But at least I am achieving above my target fill rate. I'm targeting a blended fill rate of some 93%, meaning that 93% of the time when a customer asks for something, I've got it in stock. And I'm actually achieving higher than that. I'm hitting 97. You can see that that has made dramatic improvement over the last 12 months. So I'm reducing my inventory, increasing my customer sat and fill rate and sales. So life is good. This tool is helping me. But let's get a little bit more specific. In that 54 million, I've got some 18 million that we have identified as fully in excess, right? That we absolutely didn't need it yet. We could have gotten rid of this and had plenty of time to place an order to fill demand from my customers. So let's go ahead and understand what we've got there. Some 438 items that represent this $18 million of pure excess inventory. And not only that, and I can drill in and see all 438 items, but I also am showing my top 5 items that are contributing the most to that problem. We know that everybody lives in a day of constraints, right? There's only so much time and money that we can use to solve problems that we have. So one of our concepts here is if I can show you the top 5 items that are contributing to this condition or to my stocked out condition or to my potential stock out condition, if I look at that widget, look at those top 5 items that are contributing and maybe help me focus my attention again, as I talked about earlier, on those that will have the most impact. So we do some classifying of our items. You'll see this color coding here. So these are in green are our most important bread and butter items. We call those the key items. And if I take a look at how those are classified, excuse me, let me just segue over here. We're going to do an ABC analysis of every item. We're going to pull out any non-stocked or obsolete items. And the items that are left, we're going to evaluate and classify as an ABC in terms of value. But we're also going to classify them in terms of speed of movement or velocity, a high, medium, low speed of movement. Excuse me. And so the net result of that is we combine those two axes together and we get a really nice picture of how our inventory fleshes out, what that looks like in terms of our high value, fast moving items, those items up here in green, and how that compares to the other items that are in my inventory, both in terms of physical count and in value. And maybe these items in the lower left in red, maybe I would even question why I even bother stocking those. Maybe I can talk my suppliers, or some of them at least, into managing that inventory for me. So now with that color coding background, as I look at my top 5 list, again, my eyes can go very quickly to focus on where do I need to pay the most attention. So we've got a couple of forward-thinking items here, as opposed to just what's in excess and what's stocked out today. What do I maybe still have the ability to take some action on to prevent the problem? A surplus order is a PO that when it arrives is going to go directly to excess because I didn't need that product yet. A potential stock out says, I've still got product in stock today, but we're expecting and projecting that we're going to run out before the next replenishment arrives. And I've got 20 items in this example that could cost me $89,000 worth of lost sales if my customer goes elsewhere when that demand gets presented. So I want to work on some of those and see if I can expedite some orders. And here's one that's in green, right? It's an AH, so it's a fast moving, high value item. This is a bread and butter item. It's the last one I want to run out of. So maybe I want to click on that. I even see there's a little comment bubble there, so I know someone's already been working on it and maybe posted a comment there. So let's go ahead and click on that item, drill into that detail, and make sure that we've got a PO already coming in. And if not, get one placed right now and maybe expedite that so we can try and get ahead of the curve. So now we've had the ability to drill into the item detail and see all kinds of static information in terms of quantities and costs. I can see what my demand profile looks like. One of the things I didn't mention is that Netstock is going to provide 15 different forecasting algorithms built into the application. So it's going to look at historical patterns of use of that item and look for trends, look for seasonality, look for odd spikes or dips that maybe need to be smoothed out. Some very sophisticated mathematics going on within those algorithms. And it's going to choose the best fitting algorithm that best matches that historical pattern and then use that to project demand for the next 12 months. So as I drill into this individual item, I see that profile presented to me and I can see exactly which algorithm of those 15 was chosen. So no obvious trend up or down, but definitely some seasonal patterns there. I can also see that I've modified this forecast because I've got this little red snowflake here that means I've frozen or modified some forecasts. Here is our safety stock calculation. So based on how that item is classified as an AH critical item, we've got a very high fill rate target of 98%. We know we buy this item every couple weeks. Here's our lead time. And then let's look at those risk factors I alluded to earlier, supplier risk and forecast risk. And based on all that, put that all into the hopper and come back with a projected safety stock of 5 days. So Netstock says, given all this information, we really need to have 5 days worth of safety stock. And now that flows into this middle panel that says, okay, let's look at my lead time plus my safety stock gives me my reorder point or my min, plus my replenishment cycle, both in days and units, you'll notice here, gives me my order up to or my max. So every single night for every item in every warehouse, Netstock is going to calculate a safety stock, a min and a max, and then take a look at my current stock status and make a recommendation as to what I need to buy and assign a status to that item. So this one's in potential stock out because I can see I'm upside down. I've only got 2 days worth on hand. I've got a 3-day lead time. I've got some other demand out there. I better go ahead and place this order. So we're going to do all that heavy number crunching, all that heavy math for the demand planners and buyers in your organization so that they can just get the information, understand it, and then take action on it very quickly. As we slide down real quickly, I can see exactly more detail on my forecast, how I modified that forecast. I can see any open purchase orders or any open customer orders. And again, all this data is coming from Fishbowl, right? That's our source of truth. Fishbowl is doing a great job all day long of capturing all these transactions and really giving us a good understanding of where we stand. But we're now going to take all that raw data, look at our supplier performance, our lead time activity, look at our bills of materials and kitting. We can go down to 99 levels in a bill of materials. So we know if we have finished good demand, here's the component demand that explodes as a result of that. So we're going to have all that understanding out there and really give us a nice projection based on that fluctuating demand profile, what my purchases need to be. So based on what I'm seeing today and what I know, here's exactly when I'm going to be placing purchase orders in the future and for what quantities. And that's obviously going to change daily or monthly, but I have the ability to take a look at that, maybe even send that to my suppliers to say, hey guys, here's what I'm expecting to buy from you over the next time horizon, 30, 60, 90 days, whatever I want to send to them. And because we can download all that into a CSV file. So just a great visibility and understanding of the health check again, and answers that first question, what needs my attention? And then real quickly, the second question that we answer is, what do I need to order? So based on all that analysis, Netstock now comes back and says, here are all the suppliers that have at least one item that I need to buy today. And so I can look at each of those with a quick kind of synopsis or a summary view of each of those. I can select one that I want to buy and say, okay, let's select that supplier and go create an order. And what we're going to do is give you an order schedule, kind of a workspace environment to understand all 11 items. Each line item is broken down in detail. Again, we get that demand profile. We get a shorthand for all that policy panel. We see how it's classified. We see what its status is. And we see what Netstock's recommending I buy. And it takes into account things like minimum order quantities and order multiples that I need to accommodate for that vendor. I can have comment codes. I can type in all kinds of things here if I make a change. So as a buyer, I know something the system doesn't, and I want to order 3,000 of those. I can make that change. And now here in my summary table, it shows that I still have 11 line items, but I've added some additional units, therefore some additional cost. And if I'm tracking volumes and weights, if I want to manage container fills and figure out what my shipping costs are going to be and optimize those, we give you tools to help you top out containers and make sense of that decision as well. And once I get this configured exactly the way I want, again, with all this information at my fingertips as a buyer, I click download. It creates an export file that we now import back into Fishbowl as an open purchase order, and then we follow the standard business rules from there. So very quick high-level overview. Obviously, we'd be happy to talk in more detail about your situation and share a little bit more about what we do, but just gives you a feel for what the interface is and how we manage that process and how we answer those two key questions. What needs my attention and what do I need to order? So with that, I'll kind of come back to the PowerPoint presentation here. That'll conclude our demo. And in fact, pretty much concludes our presentation for today. We're right at the 45-minute or so mark. So Gene, I'll send it back over to you. Maybe you want to talk about some of your other things that you're doing with Fishbowl. I know you're a real expert and heavily invested in that application. And then maybe let's take a look and see if we've got some questions that have been entered, or we can open up the lines as well and get some Q&A before we conclude for the day. So Gene, back to you.
Well, most of you know that we're experts in both Fishbowl and QuickBooks, and that we can do integrations with your CRM, and we can do troubleshooting and implementation. Not a lot of people know that we have an integration with QuoteWorks. So if you want to do your quoting outside of Fishbowl and not clutter up your Fishbowl database, we can do that. We can pull all of the part numbers and pricing rules into QuoteWorks, and then when a quote has been finalized and accepted, we can bring it into Fishbowl as an order. And we have a great relationship on the shipping side with Starship, and we also can do custom ShipStation and what have you integrations, and we do reporting, and we talk to your third-party warehouse on an as-needed basis. So now I think it's time for Q&A.
It is, and it looks like we have a couple of questions that have been entered into the Q&A box in the Zoom tool. So the first one I see is going to explain a little bit more about the pricing for Netstock. So yeah, happy to do that. So basically there are two components. One is a one-time activation fee that covers that entire installation of our connector and the integration, testing that, getting that first dashboard, looking at that data, doing some refinement to that data, making sure that it's representative and configured the way that works for your business and so forth. So there's an entire kind of 5-step standard onboarding methodology that we follow. And so all that's covered by that one-time activation fee. And then there is a monthly or annual, you have the option of how you want it to be billed, monthly or annual subscription fee that gives you access to the service. And again, it's on any device, anytime, anywhere. Both of those components, the activation fee and the subscription fee, scale based on the value of the inventory that we're managing. So it might be as low as $250,000 worth of inventory or $200,000 worth of inventory. We certainly have some customers at that level. And so, of course, they're going to be at a lower price. If you've got $20 million worth of inventory, our product has that much more value. Those are more complicated environments, takes a little bit more to manage and support those on a regular basis. And so then those are going to be higher priced. So it might be anywhere from $3,000 or $4,000 on the low end for an activation fee on up, and then a monthly subscription fee might be anywhere from $299 to $1,000 a month or whatever, depending again on the size of the inventory value. And we'd be happy to talk specifically with you about that to see where you would fall in that range. The second question that I see is, will the 15 algorithms take into account any sales or promotions? That's a great question. So the algorithms are going to look at historical use, sales, consumption of an inventory item. And they're going to look at that history and then create that projection going forward. So they're not necessarily going to know about any sales or promos that are coming into the future. They're really only dealing with what was done in the past. But we have that ability to edit or modify or amend an existing forecast. So the computer is going to generate a forecast based on what it knows. But now, as a buyer or planner, I've been told by my sales team or my marketing team that we've just signed this new customer. We just signed a Costco region in the Northeast, and they're going to be stocking up their product, or we've got this promotion or sales price advantage thing going on for the next month, and that takes place with these date ranges. So now, as a buyer, I can now take that computer generated forecast that the algorithm created for me and amend it, right? Bump it 10%, 20%, go into particular months and just do a hard increase of the number. I can do that at the individual item level, or I can do it for kind of a top-down model by product line or by supplier. Maybe there's certain product ranges that we can classify and bundle together and say all of these items are going on a promo, so let's bump our demand expectation by 20% for this 90-day period. And then once I make that amendment, lock in that new forecast, that now trickles into all of my purchase and buying recommendations and all the stock statuses that we looked at on the dashboard. So the algorithms are going to look at history as it stands, but then we have the ability for the buyer planner to apply their own tribal knowledge or other information to adjust that forecast. So hopefully that answered that question. And those are the only two that I'm seeing, Gene, unless anyone else has seen something. Unless we want to open up the phone lines, if we want to have a conversation that way as well. Is that possible, Eric? Well, looks like that's going to do it for us. So again, thanks everybody. Really appreciate your time and interest. Hopefully that was helpful to you and you saw something of interest. If so, please reach out to, and I think I've got one more screen here. Yep. Please reach out to us. There's our contact information, either Michael J. at Tarabyte or myself, Russ Graff, and there's my email address and phone number. Either one of us would be happy to take your calls, answer any questions. And if you want to do an individual discovery session or demo session, more than happy to coordinate that with you. So Gene, unless there's anything else on your end, I think we'll conclude and wrap it up. And thanks again, everybody. Appreciate your time.
I think we're good. Thank you, Russ.
Thanks, Gene. Appreciate the opportunity.